Hello and welcome to the Sharesify podcast. I'm James Crux and I'm joined by Ian Conway and Stephen Fraser as per usual. Hi gents, all well?
Hello, yep.
Right, now
Yes,
two
James. Happy
companies.
Friday.
Yeah, no, good to see you both. Two companies have hogged all the headlines this week, namely Jensen Huang's Nvidia and Elon Musk's SpaceX. Steve, you've done some digging on Nvidia's numbers. What were your key takeaways?
Well, again, another very impressive quarter, and we just come to expect impressive quarters. The question for investors is always now about how much more impressive than expectations they were, and they beat expectations. But I think the really interesting point to draw from this was just how rampant the data center revenue is growing. I mean, Wall Street expectations had 73 billion in the forecast, 75.2 billion. I mean, 2.2 billion outperformance. That's pretty incredible. That nearly doubled year on year. So, I mean, that tells you something about the pace of growth and how much money is being spent on the kind of the wider AI theme. So, going forward is making all the right kind of noises about, again, those CapEx taps are still very much on. He's very, very bullish. And it just looks to me like there's a long runway for Nvidia success going forward. If it doesn't, you might not see share price performance quite like we've seen over recent years. It's going to be difficult for a company worth nearly $6 billion to double again in size. But right
trillion.
Wang, at your peril.
6 trillion, Steve. 6
Yeah,
trillion.
6 trillion. Sorry, yes, yeah. What a faux pas.
Just a decimal point out there.
Yeah, absolutely.
These results, and I think these results and the results from all of the rest of the Mag 7 bar, maybe Tesla, just reinforce the kind of enthusiasm that managers have got for the whole tech story, and particularly the AI and the data center story. We had the Bank of America survey out earlier this month, which polls about 200 fund managers with, I don't know how many hundreds of billions under management. And it's sort of biggest ever jump in net long exposure to equities from 13% to 50%. So that's in 25 years of the survey having been going. You've got the highest ever level, and the biggest concentration is in chips and the AI story. Something like 70% of managers are now net overweight that.
I mean, there's a really interesting point I think investors need to be aware of. In tech circles, we've been discussing this for at least 5 years, and it's about technologies becoming beyond a secular theme. This is not something where I invest in maybe real estate, or maybe I invest in healthcare and I invest in tech. Tech is behind almost any industry you care to name. So when we're talking about the tech journey through AI, it's impacting everything down to your local pub, or down to how they run parks, or how rivers are kept clean. It's really got its tentacles into almost everything, and it's these technology companies and the big storage companies, data centers, that are really firing that. So that's the really big macro picture.
And now, Steve, we're going what's the word? Infinity and beyond.
We're reaching for the stars, aren't we?
Yeah. We got there's more details on the SpaceX IPO this week, which you've written out.
Yeah, I mean, it got well covered. So, I covered it on our Sharesify website. So if you want to go and have a read of that, please do. There's a lot of information contained in there. I think the really interesting thing is the scale of the IPO. And there's a table I put in my piece, and it shows the biggest 5 IPOs in history. And Saudi Aramco was pretty close, $1.7 trillion. But most of that was retained by the Saudi government. The next biggest was about $140 billion. So, I mean, the jump is just stratospheric. SpaceX has been talked about potentially being valued up to $1.75 trillion. This would potentially make Elon Musk a trillionaire in his own right. That's pretty gobsmacking stuff. But beware, right? UK retail investors have almost no way of getting involved in the actual IPO. So it's going to be secondary market stuff. And there's going to be enormous volatility. And the shares could be jumping all over the place in the next 3, 4, 5 months after the IPO. So really be careful about, when you choose to invest, if you choose to invest, and just be careful about, look at the valuations. It's not being valued on it being a space business, being a rocket business. It's valued largely on Starlink, its satellite network business, and lots of other stuff that Elon Musk is thinking about trying to do. Data centers in the low Earth orbit, for example. Now, this is kind of like build the Death Star kind of scenario, right? This is years in the making if it ever comes to fruition. So when you're already building in that to your valuation, there's a lot of froth there. So just be wary about what you're buying off more than you can chew.
Yeah, I mean, coming back to Earth, James, we had some great results out from UK consumer names this week, didn't we?
Yeah, surprisingly resilient, aren't they? And it's
Yeah,
more, yeah, in many cases, I think it's more kind of a self-help stories rather than a consumer spending tailwind. But we
okay.
had Dr. Martens, Currys, one or two others. One that caught my eye, which is a classic self-help story, is TheWorks. So they've shut down their online business, done a lot of work on product margins and benefiting from, robust demand for kind of screen-free products as parents try and get their kids off the iPhones and the tablets and whatnot. So yet another upgrade from them. And a bit more action in the investment trust space. So we had Schroder UK Mid Cap Fund has launched a tender for up to 100% SABA. They seem to have got SABA off their back. And it means investors who want to stick with the fund can stick with that mid cap strategy.
Yeah, investment trusts have been a really interesting space, haven't they? And we've been doing lots of podcasts over the last few months, and just this week, Aberdeen UK Smaller Companies, a good podcast with them. We had Simon Bernard from the Smith and Equity Fund, used to be the investment trust. It's now changed, but really worth plugging in listeners to those podcasts because they're fascinating insights from definite investment experts.
Yeah, absolutely. I mean, on that subject, I was looking at what we call quality growth companies and seeing if they're still delivering this weekend. Yeah, they are. Diploma, which is one of Simon Barnard's stocks in the Smith and Equity Fund, delivered great numbers. Then we had Diploma makes seals and fasteners and so on for defence and aerospace companies, but also for the healthcare industry. Very kind of mundane type of stuff, but it just keeps banging in 10-11% growth every single year. It's amazing. And then we got Hill and Smith, which is big in infrastructure, and that's the name for Abby Glennie, who runs the Aberdeen UK Smaller Growth Companies Trust. Again, great numbers. That's among the infrastructure stocks. You get, as Abby said herself, some of them in the past wouldn't have qualified. Things like Balfour Beatty and so on, the revenue was very lumpy and very uneven, and that's been the case for a lot of infrastructure names. Hill and Smith, on the other hand, very steady earnings growth. I think also we're looking forward, James, going back to your consumer names, we're looking forward to a couple of others, including Newbie Princes is coming next week, isn't it?
Yeah, the CEO is stepping down there, so that was a bit of a shock, given it's quite a recent IPO. Wasn't taken well by the market. And we've got Kingfisher Q1 on Tuesday, I believe. Ultimate
Okay.
Products, Pets at Home, and across the pond, Costco, Dollar Tree, and Best Buy next week.
Yeah, I mean, it's going to be a really interesting week, I think, next week. And you've got big consumer-facing companies on both sides of the Atlantic. You mentioned Kingfisher, Costco, Best Buy, a whole bunch of Dollar Tree, a whole bunch of these really core consumer spending names. So that might be a real temperature gauge on how healthy US spending still is. And
Yeah,
Kingfisher,
absolutely.
again, a really good, B&Q DIY. It's a really good measure of just how confident people are. Are they, doing up their kitchen? Are they putting on a conservatory? That kind of stuff. So really interesting dynamics.
Yeah, but you're not off the hook, mate. You've got Dell and load more tech names.
Yeah, absolutely. But I mean, for tech, you might as well just say AI. Everything's basically AI. So Dell Technologies is the one I'm particularly interested in. It's just been an absolutely outstanding performer, and it's really a story about we're no longer just a manufacturer of PCs and laptops, which is how most consumers would know them as. But it's
Yeah,
about they make
agreed.
server computers. So of course, the expansion of the data center is a massive opportunity for them. So they still make computers, they still make laptops, but they do a lot more as well. So a really good insight into, again, that infrastructure side of the AI trade, which has been by far the winning trade so far in AI. And there's also, even today, I mean, Softcat, a UK company, it's an IT reseller effectively. It sells infrastructure and software products. But again, it's got this big kind of upsell into AI as businesses want to modernize their IT infrastructure and their go-to-market strategies with AI. Softcat is a hand-holding partner, and it's done very, very well again. So really interesting dynamics. You can get AI in the UK. You don't have to go to the US.
Yeah, how about that? Well, I think that just about wraps it up for us for this week. Nice long weekend to look forward to. So Hope you all enjoy it. Thanks very much for watching and listening. Please remember to like and follow on your favourite podcast provider. We'll see you next week. Till then, bye.